All right, welcome everybody to my Forex Bootcamp training. Okay, we're in March 8th. It's about 1:26 p.m. It's had a late start today, but it's okay. Had some computer problems, but got it fixed. And we're looking at the chart right now. What I'm going to do is do a quick breakdown of Bitcoin and make some predictions. Okay, now everything that I suggest today is just a suggestion. Please consult with your financial advisor if you decide to involve yourself in investing in Bitcoin. Bitcoin is a very volatile uh, coin, right? It's a cryptocurrency, and do not invest money you don't plan to use for your bills. So if you have money set aside and you have some extra cash, you might want to consider Bitcoin. Or Bitcoin is right now. I'm going to do the analysis of what I see on the chart. So what I share with you, hopefully you'll be able to apply it to your strategy when looking at the charts, when looking at different cryptocurrencies, Forex tools, and things of that nature. So basically, today's session is about a breakdown of what Bitcoin's going to do in the foreseeable future and how to look at the market. The great thing about the market is you can buy and sell the market, which is great. You can make money on a downward trend, you could make money on an upward trend. But the first thing you should always ask yourself is what trend is Bitcoin in right now? So that's the first thing we're going to look at to determine whether we should be in on a downward trend for a sell or on the upward trend for a buy. So the first thing I do is normally go to the monthly chart, okay, and I take a look at the overall picture of Bitcoin. All right. So as you can see in this chart, the overall picture of Bitcoin is bullish. Okay. Bullish meaning it's going up, right? Because as you can see in the chart, we have higher highs here. Okay. All these highs, these peaks here, were higher than the previous highs. So that's telling me that we're in an uptrend, right? So right here is where we put my trend line as far as telling me that Bitcoin is in an uptrend. But as you can see, the last two candles, there's some retracement going on. So there's a little pullback, a correction happening, because whenever people um, purchase Bitcoin down here on the low end of the spectrum, when it hit its high, a lot of people have decided to start taking some profits off the top so they can have some cash flow, right? We're in 2025. So it makes sense to, when you owned it down in these levels, to sell it at the top. That's why you have a retracement. That's why you have people, you know, deciding to sell Bitcoin because they want to just make some money because they had it, gotten it down here somewhere. All right. And now they're just selling it to the market to get some profit off the top. Okay. But with every retracement, there's a bounce back. Okay. So we look at these lows here and we try to find where in the market, okay, okay, we try to put these lines here. Let me put some horizontal lines here. So we have a high here, right on top of the candle, not the wick, but the candle. And then we have a low down here. Okay. So you always want to look for supply and demand areas. Supply and demand is at the bottom, supply is at the top. Okay? You sell at the top, you buy at the bottom. Okay. So rule of thumb, always remember to do that. Now, if we go down to the lower time frames, we're going to notice that although we're in an uptrend, right, with this trend line, we want to understand why there's some pullbacks here. And does this mean right here, this little green candle here, does this mean that the pullback is over and it's going to go higher? Well, let's take a look. We go down to the weekly now. Let's go down to the weekly. And we notice, excuse me, that the retracement is somewhat, reversing, okay? Because we had a hammer candle here, okay? We have a doji candle here, which told me that it's telling me that there was a reversal. Whenever you see a doji, is a reversal going in the opposite direction. All right. So there's a hammer here, but there's a candle here that's pushing higher. So the sellers, if you look at and you look for a fair value gap. Okay. Now, remember my previous trainings, fair value gaps are gaps between three candles. Okay, so we got to find where that fair value gap is between three candles. Okay, so if you look at this bullish candle here, and one, two, three candles, there's a gap between this wick and this wick. Okay, you skip the middle candle, but the candle one and candle three, there's a gap, meaning those two candles did not come back and touch each other. So let me just show you what I mean. Okay, so this wick right here and this wick on this candle, there was a gap. Okay, so whenever there's a gap, the market has to come back and fill that gap, which is this middle candle here. This is what happened over here. Okay, the market was going higher, and then it realized that hey, it left some orders down here that it needs to fill. Okay, because a lot of people jumped into Bitcoin right here, but there was a gap. All right, so the market has to come back and fill the gap and pick up the remaining of those orders to head higher. Okay, so that's why you see this pullback happening right here. As you can see, it filled the gap right there. But look a little lower below this area here. You'll notice that there's another area right here between this wick and this wick here on that candle, that there was another gap. Okay, and what happened? The market with this long wick right here, which was a retracement, tapped into that gap right here and pushed up, right? Therefore, picking up the remaining of these orders in this area as well. All right. So you had two gaps that needed to be filled. And lo and behold, they were filled by this long wick and then this wick and candle here as well. Okay. Now, the baseline, or I should say the demand area is right here. Usually it's the candle, there's a bullish engulfing candle right here. Is in front of this candle, this black candle here. And as you can see, it bounced off, okay, and continues to climb higher. All right, so that's a demand zone. Now the supply zone is up here. Okay, this is the supply zone. Right. Whenever you see a bearish engulfing candle, which is bigger than the candle previously, there's a supply zone. Okay. Now you're going to go down now to the daily. Now that you marked up your chart and said, okay, these are the areas that I want to, pay close attention to, because these are the areas that if the market continues to climb higher, you want to place your trades in these particular areas because these areas were already filled. Okay, these gaps were filled by these wicks and so on and so forth. But don't let that fool you because we still have to take a closer look to see if there's any more gaps that need to be filled below these levels. Okay, so now that we're on the daily, let's take a look to see if there's any gaps within this area right here between the demand zone and supply and demand zone. So we got to take a look to see if there's any gaps within these candles that the market may come back and fill. Okay, and if it does come back to fill these gaps, that's where you want to place your buy orders. That way you can ride the market all the way up to higher highs. Okay, because whenever it pulls back, it needs to then go back up here and make a higher high. Okay, so let's take a closer look. We're in the daily. Do we see any gaps in this particular area? So we're going to start down here in the demand zone. Okay, so do we see any gaps? Well, yeah, there was a gap here. Let me take out this tool. This candle and this candle. Make it red for you guys so you can see it. Get thicker. We can mark out the gaps. All right, so between here and here, there's a gap. See that candle right there, the middle candle? There's a gap there. So what happened? This black candle came down and filled the gap. So this gap has been filled. Okay. Now, let's see if we can find anything else. So we know that that gap has been filled. So the market typically is not going to come back to this area because it already filled it. Now let's go up a little bit. Let's see if there's another gap. Oh, there's a long wick here, and there's a little wick there. One, two, three candles, right? The middle candle, did those two wicks meet up and touch each other? No, it did not. So there's another gap there. Okay, so what happened is the market went up, came back, filled that gap. All right, so this gap has been filled. All right, now let's take a closer look at this area here. Remember, one, two, three candles. One, middle candle, third candle. Did this wick and this wick touch each other? No. So what happens is this is another gap. So we can color in this gap because the market did not fill this gap. Okay. It tried to, right? It tried to fill the gap, but it didn't. Okay. So there's an opportunity here for the market to come back to, to fill this gap. When, we don't know. We don't know. But in the near future, okay, even though we have a retracement going on right now, we need to pay attention to see if that area, because we have a retracement here, right? If the market won't come down and fill this gap. Now we're on the daily, so we can make a prediction. Okay, so here, that the market needs to come down, fill this gap, bounce off, and make higher highs, right? Now we just don't know when that's going to happen, okay? Because the market usually doesn't go straight down, right? It does make a pattern. So you got this kind of pattern where the market can continue to, trend lower, fill this gap, and go trend higher. That's one prediction. All right. So that's one to write down on your notes. So the area of, you know, this area is a gap. So the market may fall down to this area, 64,913. Okay. To pick up all the orders that was left behind in this area. Okay. So everybody's like, well, can the market really go down this low? Oh, yeah, it can. It can. So, but what about the people that bought up here? Well, they're in a buy and hold situation. Okay. I never recommend anybody to sell anything because you don't really lose money until you actually sell out. Okay. A buy and hold, if you bought it up here in this area, you just hold on to it. Okay. And then buy more when it gets down here. So you double down and buy more at these in this area, dollar cost averaging. You buy more in this area so you can not only give back your gains, but make more on the way up. Okay. So don't panic. If you bought it up in this area, you're like, oh, I just lost money. You haven't really lost anything. All you see is numbers, negative numbers on paper. Okay. The only time you actually lose money is when you sell it back to the market for a loss. Okay. So just hold on to it, hold your breath. It's going to take some time to rebound. So that's one prediction, right? All right. Because a lot of people have been predicting that the market's going to go higher and Bitcoin's going to be 125,000, 130,000, but nobody knows when that's going to happen because it's already hit its higher high not too long ago. But that may happen or it may not. Okay, that's just a prediction because the market will do what the market's going to do. All right, so we could actually, erase this and see things like this where the market's actually, you know, comes back down and fill this little area and then trend higher, hit this area again, right? And then tread lower like this because it doesn't forget that there's a gap here. It needs to come back and fill the gap, but we just don't know when that gap is going to be filled. All right. So that's on a daily chart. But let's go a little lower because we're going to go on the 4 hour and see what's going on in the 4 hour. All right. So definitely mark your chart up based on that gap that I showed you previously. So in the 4 hour, we have to just wait Now you're probably saying, well, can I take a sell order? Can I place a sell order? If it's going to fill that gap, I could make some money going down, right? Yeah, you could technically either you wait for this area by setting an alert on trading view. You set an alert for the market to tell you, or trading view to tell you that, hey, we're getting close to the area that you set an alert for, and then you say set the alert for buys. So once the alert, the market comes down this area, you just look at the charts again and you try to decide whether or not you want to place a buy order to ride the market higher. Okay. Or you can, plan for a sell order. So let's take a look at that as well. So we're in the 4 hour, but before you jump into the market, you have to find gaps. You only place your orders during a fair market gap, right? Fair value gap is what it's called. All right, so let's look at the 4 hour. Okay. And don't go into the market with 2 feet right when you see the chart. You have to get in the market on a retracement. So if this market is trending lower, right, to fill that gap, we have to find out, are there gaps above to take a sell order on? Okay. All right. So let's take a look here. Because the 4 hour, pretty much, if you chart it out, you can say to yourself, okay, the market did make a high here, and now it's trending lower, right? Which is a counter trend. These are all sell orders that you could place based on this trend line. If you would have caught the market here, you sold it, make a profit down here. Then you wait for the sideways consolidation, then it touched the trend line, place an order here, and then took advantage of this sell order. This area here made a profit. And then you waited again for the market to hit your trend line, okay? And basically, you notice that it hits your trend line, right? And right here, right here, you notice it's a bearish engulfing candle, which is bigger than the candle before it, right? This candle right here, off your trend line, and you place an order on the retracement. Like so, you would place the order right here on this candle, because whenever you see a bearish engulfing candle, which is this candle right here, is going to come back and retrace, right? Retrace right into this area and pull all the way down. Okay, these are telltale signs that you could have placed a trade right here, right, and captured these pips right here going down. All right. All right. So, but look what's going on here. Now, you have this zone right here, right? And what happened? This zone is a supply zone. And what it did was it sold off this zone, retraced back, touched your supply zone, and placed another sell order, right? And look at that. You could have caught all these pips going down. All right. So that's a counter trade. So A, you can place your trades going down. B, place your trades going up. Now, whatever direction or trader you are, if you're a um, upward trend trader, you wait for the market, you plant your trap, right? Because you're going to be the hunter, not the hunted. You don't chase the market. You wait for the market to fall into your trap based on your trading plan. And then you place your trade based on the trap. Okay. So, two ways to look at the market. Now that it's trending lower, to fill those fill value gaps on the bottom, you could place trades going down. Okay. But be very careful when doing so, because it could just go above your trend line and then go higher and make higher highs. Okay. But at least you have a trend line to let you know what trend the market's going in. So it's really important that you set your trend lines accordingly. Because if you go down to the 1 hour, you notice that the trend lines you put up here, everything's below your trend line. Okay. And another thing you could use is an indicator, which is your it's moving average exponential indicator, right? And this indicator, you set it the input at 100. You change the color, I like using red, and the thickness. And you just take a look at where this line is. Anything above the line are buy orders. Anything below the line are sell orders. So here you are. You're below the line. So you anticipate placing sell orders whenever you see the market below this moving average. Okay. So that's the 1 hour. But you want to place your trade really on the 15-minute. This is where you plant your trap on the 15-minute. Okay. Because you already know you're below. You have your trend line telling you that the market's retracing to go towards that gap on the bottom. Okay, it's got to go back and fill that gap. So during that process, all these orders that are down here below this line are sell orders. Okay, people taking profit from the top, they're cashing in. Okay, because they got it really low below, they shot up to their levels. They're taking profits, taking profits, taking profits along the way. Okay, and all of this stuff down here is below the moving average. So you just plot out your trap, right? You send it to place trades going lower. Okay. Now, 5 minute, same thing. As you can see, it's below the moving average. So this is a good tool to have to give you the direction of where the market's going. You already set your trend line, you know it's going. It's a downward trend, but it's a retracement. Because remember, we started with a monthly chart. And we saw in the monthly chart some retracements. We saw some retracements, right? This black candle here, which is a bearish engulfing candle, was one sign. And then we saw a retracement where the wick went up. That's why we have this little hand here letting us know that, hey, we should be looking for sells, right? And that's exactly what happened in the lower time frames. Okay. Sells. Okay. So hopefully, you guys got some value out of that. Now, always set your stop losses. Make sure you always set your stop loss. You don't get over your account. I'm in my second phase of my challenge. I passed the first phase. I'm really excited about that. And one of the things that helped me succeed in this challenge that I'm in is that I always set my stop losses. When the market reversed in a different direction, it stopped me out, but it didn't blow my account. Okay. And your stop loss should be set anywhere from like 15 to 25 to 35 pips above your order or below your order, either or. If it's a downtrend, you set your stop loss below. So for example, you saw this right here and you got in on this candle over here. You set your stop loss above these candles. Your take profit would be at the next level of area of interest. Okay. And this would be an order. If you take this tool here, a short order, let's say you got in right here. The stop loss is right here. Always use this tool. It's a really good tool. Okay. And it's a 1-to-2 ratio. Okay. Meaning if you traded $100, you doubled it. A 1-to-2, you made $200. Okay. If you traded $1,000, you made $2,000. It's a 1-to-2. All right. So it's a good tool to use. Okay. So always place your stop loss. Okay. On every trade. That way, if it reverses on you, it doesn't blow up your account. It's important to do smart money management. If you can manage your downward losses, you'll succeed in the long run. Because if it stops you out, you still have money in your account for another trade. Okay. And try to place at least three, anywhere from 2 to 3 trades a day. Be patient. Don't try to revenge trade and say, I'm going to try to make my money back. If it goes against you, re strategize, you know, rewind the tape, take notes, write in your journal, and ask yourself what went wrong. What didn't you see? What did you see? Your journal is really important because that reminds you what not to do in the future. Always write down mistakes you've made in the market. I do, and it helps me. Um, but I'm excited about trying to pass phase two. Phase two in the challenge, I just got to make $750. I'm $150 in, which means I only got to make over $500 plus. And then I've passed phase two, and I'll keep you guys posted on that. And I'll let you know when I pass phase two. And I'll eventually go live, and I'll post that up as well. But with that being said, I wanted to let you guys know that that's my prediction for Bitcoin. Bitcoin may see lower lows because it's got to fill that gap. Anticipate that. But in the meantime, set your traps for the lower lows. Okay. Set your traps for that area down there and set a reminder. Okay. Set a reminder on alert. Capitalize when the market hit those low areas. Is it the weekly? Okay. Which is this area down here. Because remember, there's a gap right there. And I anticipate the market correcting itself, coming down to this lower low here, right? And then bouncing off this area. Now, will it do it? I don't know. Nobody could predict it. I'm not a market maker, so I don't press the buttons. But we do see a gap down here, so we can anticipate the market, trying to fill that gap at some point in time in the near future. And then hopefully it'll bounce off this gap and make higher highs. And that's where you want to be in. Because imagine if you got into Bitcoin down in these lower areas, okay, you'd be sitting pretty right now. Going forward, you could have sold Bitcoin up here and it's a nice profit for you and your family. All right, so with that being said, thank you so much, everybody, for watching this video. Hopefully you found value. Hit the bell button. I'll get reminders of future videos like this. I do this once a week about this time. Share it with your colleagues, your friends, your neighbors, and like the video. It helps, with the algorithm, and YouTube pushes this video out to more people who are interested in Forex trading. But this is the way I analyze the chart. Okay, I open the chart, look at the higher time frames, I look for fair value gaps, I look for supply and demand areas, and then I just wait for those areas to be filled. And then once they get to that area, based on my alerts, that's when I want to place my trades, write it upward or write it downward. Simple. Anybody can do it. You can do it. It takes practice, takes time. And once you open your eyes, just finding these gaps, no reason why you can't succeed in the market going forward. So with that being said, thanks for watching. Much success to you guys. Next week's going to be a good training week. And yeah, put in the comments. Let me know what you think. All right. Take care, everybody. Bye for now.